In this episode, number 5, we're going to show you how to do a reversal of a year-end adjustment, which means this is an adjustment that was done in the previous financial year. And the question also includes then a current year-end adjustment for the current financial year. Enjoy the episode. Support our channel. Please like and subscribe and buy us a coffee. We would really appreciate it.
Another adjustment that sometimes leads to a lot of confusion is this reversal and the accrual, and then it is a deferred income. So everything changes. So this adjustment has got quite a lot of components to it. So what in the first place is a reversal?
When I see so much information, I think I start having heart palpitations, and I'm sure that's how learners feel as well. There's just like so much information here. So the best advice is let's just take it one sentence at a time. Let's not overwhelm ourselves with everything. And usually when they set the papers, the people are quite smart. They give things to you in the order in which it should be done.
Exactly.
Okay, because they're not trying to make you not understand what's going on. So the bookkeeper forgot to reverse the accrued commission income of 8,200 Rand at the beginning of the year. So this is this is an adjustment that was done last year, has to be reversed normally on the first day of the year, but the bookkeeper has forgotten to do that.
So how will that affect the commission income account?
Okay, so if it's an accrued commission income, it means that we were still owed 8,200 Rand from the previous year. So in terms of T accounts, this is how my brain works. So I'm just going to make a little T account. Accrued income is money owing to us, which means it's an asset. So it is a plus minus account. So this commission income was owed to us. So it would be sitting on this particular side, on the debit side. So we need to take it out of accrued income. So you will need to reduce your accrued income. Where's accrued income found on your notes to your financial statements or on your balance sheet? Where would it be found?
Okay, that will be trade and other payables.
No,
receivables.
Receivables, yes. Receivables, because it's money owing to us. So you would have your accrued income listed there, and it would have this amount in it of 8,200. And now we need to show that we are reversing it. So please minus the 8,200 from the balance that you see there that was brought from the previous year. Okay, so we've got a credit entry. For every credit, there needs to be a corresponding debit. Because this is commission income, it's going to affect your commission income account. All right, and if it's an income, then what kind of account is it? Then it is a minus plus account. So we have credited or reduced our accrued income. So we need to debit or reduce our commission income. And we're reducing our commission income because this is not income for this financial year. It's income that relates to the previous financial year that we have now received. So we minus it because we don't want to accidentally add it into our commission income for this financial year. Does that make sense?
That makes sense.
Okay, perfect. Are you happy with everything there? So in your income statement, you would look for your commission income, which would be under your other operating income. And you would start with, well, they could possibly have that figure there already, but you need to show that your commission income must be reduced to correspond with the fact that you've reversed the accrued income. All right, great. So I think that sentence has now been dealt with. Let's go and continue.
Okay, then the amount in the trial balance for commission income was 49,500. That means that is the amount that we have already received.
Yes, that we've received in this financial year. Okay.
So that will affect your income, your income statement under the commission income. You would have, most of the time it can be printed in there, the 49,500. But now you must remember about the 8,200.
Yes, so that's been done. Great.
Right. Now there's a terrible sentence coming up.
The company changed the arrangement. So instead of somebody owing us money at the end of the year, they didn't like that. So they've now changed the arrangement and said commission is now paid up front. So we're never going to sit with that situation again where people are late in paying us. Correct. So commission is now income received. Well, actually, I've read that wrong. Sorry. Commission income received for the manuals, because that's what they sell in this business, I guess, and they are due income for selling the manuals, will be sold from March to April 2022, amounted to 9,500 Rand, and this has already been received. Okay. Now that we're not sure what to do with that because we have to actually take into consideration when does the financial year end for this particular company. And this won't necessarily be stated in the adjustment like we have here.
Yeah.
You need to go and verify that by looking at the pre-adjustment trial balance or
Yes.
any kind of opening information that they gave you in the test. So what is our problem here then if our year end is February?
That means that we have received the 2 months, March and April, we've received in advance now.
Yes, because they're in the next financial year.
They are in the next
And that
year.
9,500 is part of that 49,500 because the pre-adjustment trial balance shows what we physically received. So we have to actually now minus this 9,500 because it's for next financial year in our income statement. And where will we put the other entry then?
The other entry will go to the one I like so much, trade and other payables.
Trade and other payables.
And
yes.
that will be deferred income.
Yes, the IEB children have the word deferred income, and the DBE exam, normally they're quite happy with
Income received in advance.
Income received in advance. So either one of these will do. They are both acceptable for both sets of exam papers, no problem whatsoever. So that 9,500 will be added to our deferred income or income received in advance in trade and other payables, which is a current liability.
That's it.
Perfect.
And the amount eventually shown in the income statement is 31,800.
Great.
So that's what we were supposed to receive for this year.
And that represents our earnings of commission income for this particular financial year. Okay, great.
So if you break up the adjustment in sentences and don't rush through the whole thing at once, then you will find it's quite logical if you go sentence by sentence.
And very doable.
And it's very doable.
Okay, so that's good. We covered a reversal. We've covered an adjustment. So this is quite an intense little question.
Intense question.